Welcome back again. This is part 7 of our video series on nonprofit organizations and our example question Mambo. In our previous video, in part 6, we would have completed our bar trading profit and loss account. So in this video, we are going to use all of the information available to us to complete our income and expenditure account. So that is what we are going to be doing here. And it is Mambo income and expenditure account for the year ended 31st of December 2014. So we are going to enter all the income for Mambo. That's what we're going to be doing, all income. And the first one we are looking at is our subscriptions of $7,912. We're going to put that in. So subscriptions, $7,912. We also have a bar profit of $17,870, so we can enter that as well, bar profit. And please note that if it was a bar loss, it would go as part of your expenditure. Okay, if it was a bar loss, it will be part of your expenditure, but this is a profit, so it's recorded as income. They also had a gain on the disposal of the vehicle, so you have gain on sale of vehicle, and that was $500. So that's $500. And we also had donations. So you also have to always look back at your receipts and payment account for any other money that you receive. So they received some donations of $15,000. So this is income. We have taken care of the sale of the vehicle, the dance tickets, and the subscription and the bar takings. All of those are accounted for already. The only thing that we received that's not accounted for is the donations of $15,000. So that will be income as well. So donations, $15,000. So the total income for Mambo is $41,282. So now let's look at the expenditure. So again, if it was a bar loss, it will become expenditure. So our expenditure, we have here rent, $13,860. So rent, $13,860. Wrong, please. $13,860 rent. We also have insurance of $7,100. So insurance, $7,100. We also had some subscriptions written off of $210. Let's not forget that. So let's put in our subscriptions written off. Subscriptions written off. That was $210. We also had a loss on the dance ticket sale or the dance activity. So that will be counted as an expenditure. So loss on dance ticket sales, $2,100. Let's see what other expenses we also have. The depreciation for the motor vehicle, $4,000. So depreciation, motor vehicle, $4,000. And then let's go back. Those are all the adjustments that we made. So you see that the adjustments that we made, I have entered in the income and expenditure account. And then what I do is go back to my receipts and payment account. Now remember, we had to prepare this, so this is why I can go back to it here. But sometimes the examiner, as I told you, would have given you it already prepared, so you can just look back at your script, your exam paper, and look to see what other monies you receive, whatever payments you were made. So we already accounted for the rent, the insurance, the dance expenses, and we have another expense here that's not accounted for, which is wages to the general worker, $11,000. So that's our final expense. We're going to enter wages, general worker, $11,000. Right, so now we have total expenses of $38,270, and that would have been subtracted from our total income of $41,282, which gives us a surplus of income over expenditure of $6,000. Let me double check that again. I think that is incorrect. So $41,280 minus $38,270, yes, gives me a surplus of income over expenditure of $3,012. Okay, $3,012. The other figure didn't look correct to me. So we have surplus of income over expenditure of $3,012. So now we have this, we can go on and do our statement of financial position. I have already drawn it up to a certain extent. So it's Mambo statement of financial position as at 31st of December 2014. We have our non-current assets. We will start with our motor vehicle. And if you go back to the question, the motor vehicle at the beginning, the cost was $40,000. And I'm just putting this in so that you know how to practice doing your statement of financial position by looking at your cost, your depreciation, and then your book value. But I could have also gone straight to my book values and just put in my book values. But I just want to get persons into the habit of recognizing that the cost minus their depreciation, if you're not given a book value, your cost minus your depreciation will give you your book value at the end. So the cost of the vehicle, $40,000. The depreciation on it is $4,000. You had $4,000, but then you also remember you had the one that you got rid of. So that's $4,000 plus $5,000. That's $9,000. So then your vehicle here would be 4,000 minus the 9,000, if you 31,000, and that's the figure that they give you here anyway. And as I said, we could have gone straight to that figure and say 31,000. Let's look at the equipment. So we have equipment and our equipment. So bar equipment. And remember, they started with $25,000. They bought additional equipment for $2,000, which gives us the cost of $27,000. And the depreciation on that was $22,570. So that gives you a book value of $24,430 as they would have stated. So let's add some of our figures. And let's see. So now we have a net book value for our non-current assets of value of our non-current assets of $55,430. So let's go on and look at our current assets. Our current assets, we have bar supplies, which is our inventory. And that was $3,300 was in inventory. We also had subscriptions in arrears at the end. And those subscription in arrears were $840. And we also had prepaid rent that we calculated. That our prepaid rent, this is what we calculated here, was $340. So prepaid rent of $340. And we also calculated our closing bank figure here. Closing bank, $91,000. Closing bank, $91,000. So let's put that in as well. So bank, $91,000. So let's add those figures to get our total current assets of $95,480. And when we add our non-current assets and our current assets together, we get total assets of $150,000, $950,910. So that is our total assets. So let's look at subtracting our liabilities. So our liabilities would be our bar suppliers, which are creditors. So I can put here creditors. And our bar suppliers were $62,761. We would have calculated that here in this account here, $62,761. Our closing bar creditors. We also had subscriptions in advance. These are prepaid subs, and that was $572. And we have accrued, which they give us at the end, insurance, and that was $650. So let's look at the total liabilities. We don't have any non-current liabilities, but if the club or the association had a loan from a financial institution, you would include your non-current liabilities. But we only have current liabilities, so total liabilities, $63,983. And that will be subtracted from the total assets to give us our net assets. So our net assets are $86,927. And all of this is financed by our opening accumulated fund that we calculated at the beginning of $83,915 and our surplus of income over expenditure of $3,012. So let's put in those two figures. Accumulated fund, you do not write capital at 1st of January 2014. That is $83,915. And our surplus, you do not say net, you don't say net profit, surplus of income over expenditure. And that was $3,012. So when we add those two figures together, $86,927 is our accumulated fund at 31st of December 2014. So we have our accumulated fund, and this completes our question on MAMBO and the nonprofit organization demonstration question. You have the full question again, and you see where we got a lot of our figures from for the statement of financial position, like subscriptions at the end, etc. And the supply, the inventory, etc. That's where we got a lot of our figures from. And this is the additional information. So this completes our full question with calculating going through all of the various steps. Here we're going through all of the steps with respect to then to come up with our bar trading account, our income and expenditure that they asked us for, and for our statement of financial position that was requested. So I trust that this series of videos were helpful to you, and we would like you to like the videos and subscribe to the channel.